Hey, what's going on, guys? Leo. So let's go ahead and dive in. So I want to comment on a post that David Hoffman from Bankless had made. I really strongly disagree with this type of marketing messaging. So he says that layer twos are not Ethereum, and I really disagree. So he puts out the diagram here where he has Ethereum at the core, and you got native base rollups, and so on. And then he goes on to say that only Ethereum is Ethereum, and I strongly disagree because, for example, using his own diagram here, are the outer layers of an onion not part of the onion? And I think that this type of this messaging it makes the Ethereum ecosystem feel more fragmented. For example, like if you look at the internet, if I told you right now, think of the internet, what would you think of? You would think of YouTube, Amazon, Google, all these different centralized organizations built on top of the World Wide Web, the internet, www.youtube.com. And so it's everything that is built on top of Ethereum is Ethereum. It is the Ethereum ecosystem. And what we need to start accepting, and we need to start pushing back on this narrative that, if you build something on Ethereum, that's not Ethereum. No, this is Ethereum, the same way that Texas is United States of America. It's part of a much larger thing. And the reason why that's important is because Ethereum gets its value not from fees. It is not a tech stock. It gets its value from everything that is built on top of it, very similar to how the internet is. So the internet doesn't collect any fees itself, but it's estimated that it's worth about 20 to 30 trillion. And that's because of everything that is built on top of it. Now, granted, the internet doesn't have a token or something that you can trade. The closest thing is Ethereum as we rebuild the internet and global finance on top of Ethereum. So again, it all comes back to, like, people talk about, oh, what about value accrual? And they're thinking of it as a form of, Ethereum needs to collect as many fees as possible. No, Ethereum is a store of value with yield, backed by the digital economy that it secures. So, a lot of people don't think of it as a store of value, but think about it. The world is literally going to be tokenizing all of its global assets, and they're going to store the real world value on Ethereum. And as a result of having trillions and trillions of dollars on Ethereum, the Ethereum asset, the Ethereum token itself, will be perceived as a very strong store of value because it secures this entire digital economy. And so, me personally, I would say that it is in that regard that it is a stronger store of value than Bitcoin, because Bitcoin's value is backed by the faith that the people have in Bitcoin's value, whereas Ethereum's value is backed by people's faith in the digital economy, and it's backed by the faith in the fact that you have trillions of dollars of real-world economic value being secured by this asset. So just from like a marketing perspective for people in general, it's much more easy. It's just much easier. It rolls off the tongue if we refer to it as just like the internet. The internet, you instantly know what you think of. If you say Ethereum, you should instantly think of like base and everything that is built on top of the system. So continuing on here, we have some news from Vitalik Buterin. So he's floating swapping the Ethereum virtual machine for RISC-V to boost scalability. So Vitalik says that the Beam chain efforts hold great promise for greatly simplifying the consensus layer of Ethereum. Buterin wrote, but for the execution layer, to see similar gains, this kind of radical change being the RISC-V, may be the only viable path. And so they're talking about scaling the base layer of Ethereum. And there's kind of some debate here that's come up recently where people are saying, oh, we need to scale the layer twos. That's the layer-centric roadmap that we've been working on for years. And then there's this other group that's saying, well, we need to scale Ethereum 1, the base layer. And I'm kind of in both camps. I think that ultimately we are going to scale through layer twos because I think that a lot of companies, a lot of governments, they're going to want to build their own customized layer two solution. You can kind of think of it like a private label. If y'all don't know what that is, like basically a company will get a product like, you get a Walmart, instead of getting the Advil, the little pills for headaches and stuff. They have the name brand Advil. Walmart will basically take that exact same product. They'll put their own private label on it and say, you know, this is our private label Advil, but it won't be called Advil. So that's a private label. So I expect that a lot of these companies, like, for example, you could take like BlackRock, they take a Mega ETH copy of that, or they license it out, and BlackRock private labels it, and that's their institutional grade platform for tokenizing all their assets and everything and bringing everything onto Ethereum. So I think that we're going to scale that way because companies really like having things built specifically for them and customized to their specifications. And then I really don't see a problem with scaling the L1. You know, I mean, great, scale it. You know, I see people attack Ethereum a lot on Twitter because they say, well, you know, what Ethereum is broken. Why are they always making these changes? Well, Ethereum is not broken. They're making improvements to meet the growing global demand for people adopting Ethereum. You know, making upgrades to a system doesn't mean that something is broken. It just means that you found ways to improve it and make it better. That's not a bad thing, guys. That's something to get very excited about because it shows that there's a lot of demand for Ethereum as the world begins to adopt it. And so we're looking for ways to scale it and make it much more amazing than it already is. So anyway, old style EVM contracts will continue to work and be fully two-way interoperable with the new RISC-V contracts. So basically everything that was old will just, you know, it'll be interoperable, and it'll basically be, he says that it'll be a 100x increase from the execution layer. So, you know, this is a huge deal if they actually go this route. You know, the layer 1 could scale quite dramatically from this. So let's go ahead and continue on here. So Crypto Rover is reporting that Putin has offered to halt an invasion of Ukraine across current front line as part of efforts to reach a peace deal with U.S. President Trump. You know, this peace is great. I hope that peace comes of this one way or another. I had heard some stuff over the Easter holiday that I guess they had done a ceasefire, but then they broke the ceasefire. I'm not exactly sure. There's kind of murky waters we're going in here. Let's just hope that a resolution is done very soon. You know, this is never, these types of things getting prolonged is never good. So continuing on. So this is a really big deal too. White House says that it's doing very well on a potential trade deal with China. And this is a big deal because we've been seeing a really rocky path with China. You know, they've seemed very, I guess, unwilling to make a trade deal. You know, it's like Trump's very used to getting his way with negotiations and whatnot, and you have China who's saying no. You know, they're just, no, we're not going to do it. We're going to stand our ground and fight you on this. So if this is true, and they are getting close to a trade deal, you know, this just lends more evidence that we could see a V-shaped type recovery in the markets. So the Treasury Secretary Bessent sees a de-escalation with China. So again, you know, that's good news. Hopefully these things get resolved. You know, we don't want this to go into some sort of really prolonged thing. You know, like I've been saying, we want this to be resolved so that markets can start recovering. So we take a look here at Ethereum. Again, we're in this long-term channel. And if we zoom in here, you can see that we're just bouncing right off the bottom of this channel. You know, we've got this reversal candle here and price is moving higher. So what we want to see is, ideally, we would want to see a V-shaped type recovery. So, you know, if we get announcements very soon, I think they were talking about Japan and a few other countries are very close to trade deals as well. So if we get those trade deals coming in, and then the Fed has permission to start cutting rates, you know, all this fear that caused this massive sell-off of tariffs, it's basically gone, and the market is going to reprice itself very, very quickly. We come over here, we can take a look at Bitcoin. Bitcoin's doing a similar thing. You know, we're in this very long-term trend channel, and if we zoom in here, you can see that we are bouncing off the 200 EMA on the monthly time frame. And so we're just reversing off here. And like I've been saying in other videos, I fully expect that we're just grinding through here, and eventually sometime maybe late this year, early in 2026, we're going to start getting into that parabolic phase as global liquidity starts to increase, rates have come down, and we'll be off to the races going much higher. And then the S&P 500, it's looking the same too. We've made this little, so basically the S&P 500 came down to the 4,800 level, bounced off the highs put in back in January of 2022. And so it came down, tagged it, and now we've moved off. And it looks like, I haven't put the measured move on there yet, but it looks like they're just they pulled back to the 50. Yeah, so they pulled back to this orange line here. That's a 618% retracement. And you'll see this pattern repeat a lot in markets. For example, they did it here as well. So I can just pull from the low to the high. And this is how the institutions actually trade a lot of the times, is they pull from a low to the high, and they just end up buying the 50. So, and then there's targets up here at the negative 236. So if that is what's happening here and we've put in a bottom, I expect that we'll be moving up to the 5,600, 5,700 price target on the S&P 500. So, this is potential that we're forming a bottom, and the worst of this situation is over here, and we can put all this crazy madness behind us and move forward. So I think that pretty much wraps up today's episode. Y'all have any questions, comments, leave in the comment section down below, and I'll see y'all in the next one.